Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Matt Schulz, chief credit analyst over at LendingTree. We're going to take a look at the August reading of the LendingTree credit card confidence index to see how people who are in debt are feeling about paying off some of those bills and what they're doing to manage some of that debt. Matt, it's great to see you again. Welcome back to Trade Talks.
Thanks for having me.
How does the credit card index work?
Basically, what we do is once a month, and we started it about 4 years ago, we ask people to rate their confidence level from 1 to 5 and their ability to pay their credit card's monthly statement balance in full in that given month. And we take that number, the number of people who rate their confidence as a 4 to 5 and call them confident. And what we've seen is that people have generally been pretty resilient throughout the pandemic up until this past summer, where we saw a real decrease in confidence, but we've also seen it spike up recently. So it's just a really interesting time.
It is really interesting. So what can you tell us about short and long-term findings of the most recent reading in August?
Yeah, in August, what we've seen is that both short-term, so people saying that they feel good about paying their balance in full this month, and long-term, basically talking to people about how often they expect to pay their balances in full for the next 6 months, we've seen increases in both of those. So we saw things crater really in June, where they hit the lowest levels they've been in the 4 years that we've done the index, but they climbed up a decent amount in July and then in August as well. And I think a lot of it has to do with gas prices, because we know that gas prices spiked like crazy in the summer, but have been coming back down a little bit. And I think that something as fundamental as gas prices to the American consumer has a really, really big role in how they perceive their own finances. And I think we're seeing some of that with the confidence index.
Yeah, and we're also seeing that in broader data as well, how it's starting to come back a bit with other confidence data with gas prices moving lower. I mean, you know, Matt, when it's over $5.50, that could be an extra couple $100 a week for someone who's commuting back and forth to work. So you times that by 4 or 5 weeks, and that does make paying off your credit card kind of a scary prospect. What's interesting, though, the index also gauges by political affiliation and their confidence in terms of being able to pay their credit cards off. What did you find from that?
Yeah, it's been interesting over the last couple of years. It's really, we've seen the confidence levels of Republicans, Democrats, and independents kind of vary to the degree that you would kind of expect, to a degree as polarized of a country as we are, especially when in the last presidential election, we actually saw confidence levels kind of flip from Democrats starting to feel better, Republicans starting to feel worse. But what we've seen over the last couple of months is a overall rise across parties, where since things kind of fell in June, we've seen double-digit increases in short-term confidence among Republicans, Democrats, and independents. And what we're seeing right now is that Democrats and independents are feeling a few points more confident about paying their card bills than Republicans are, but generally confidence levels are pretty high across the board.
That would be great if it could signal coming a little bit more close to the center. That would be a great signal, a great indicator. So what's the bottom line when it comes to credit card confidence? Are you feeling somewhat positive about this based on the bounce that you've seen since June?
I'm feeling fairly confident, but there are so many X factors that we just don't know exactly what is to come in so many different ways. And the truth is that it wouldn't surprise me over the long term, over the next 6-9 months, to see confidence fall off a little bit as inflation continues to rise, as the Fed continues to raise rates, as delinquencies start to tick up a little higher. Consumers have been really resilient over the last few years, but there really is only so much that you can expect them to take without kind of retreating a little bit.
Let's talk more about that. How will the upcoming Fed meeting impact consumer credit? What should consumers expect?
Well, consumers should certainly expect the Fed to keep raising rates. It looks more and more like they're going to keep their foot on the gas for at least another meeting or two, but nobody expects them to stop raising rates anytime soon. And what that means most immediately for consumers is that their credit cards' interest rates are going to rise within the next couple of billing cycles. And we've already seen credit card APRs rising to as high as they've ever been since I've been watching them for more than a decade. And the troubling fact is that they're only going to keep rising. And then when you factor in inflation and just overall economic uncertainty, that's going to make it difficult for a lot of folks who are already on a tight budget living paycheck to paycheck.
And Matt, let's wrap with that. What's your recommendation for consumers managing their credit card debt in uncertain economic times?
Take action as soon as you can. You don't have to just sit by and let those rates increase. You can get a 0% balance transfer credit card. Those offers are widely available. If you can't get one of those, you could look at a low interest personal loan. And you can even do something as simple as calling your credit card issuer and asking them for a lower rate. It sounds like a strange thing, but our recent survey from earlier this year showed that 70% of folks who asked for a lower interest rate from their credit card got one, but far too few people ever ask. So you do have options, but it's up to you to take action.
All right, Matt, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.